Income Tax 2020 Practice Problem 1 Part 6 Data Input for Form 1099-B Proceeds from Broker and Exchange Transactions, focusing in on the formula rather than the tax forms. We're going to put that formula into an Excel worksheet. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along, although I do think they have a 30-day free trial. So if you can get access to a promo or demo version of it or any other software, might be a good tool to practice with. We're going to be focusing in on actually the Excel formula or the tax formula that we put into Excel. This is going to be another way for us to visualize the information as well as to double check the data input that's going to go into the tax return. So in prior presentations, we entered the information step by step into the tax return, starting with the W-2 information, and then we entered the 1099 divs, and then we entered the 1099 interest, and then we went and entered the 1099-B, which is the stock sales, and that's going to resulted in this $3,000 negative amount here in the first page of the 1040 and the supporting Schedule D over here. So now we have the Schedule D. And it was a long-term sale that took place. There it is. And then we had this 300 that was there from a prior distribution that wasn't a dividend distribution, and it was a capital gain distribution from the 1099 dividend. So now we're going to mirror this stuff into our Excel worksheet, imagining that you can do this in two separate scenarios or two separate inputs, one into the software, one into the Excel worksheet from the source document as much as possible to give yourself a double check that everything is done well as just to basically visualize what will happen in terms of the taxation for changes that could take place. So in other words, if I was to then take a look at this 1099-B now, we have the stock trade, and we have the proceeds of the 1,300 and the cost of the 5,000. So I want to be able to visualize where that's going to go in terms of the forms and the formula and what will be the impact, and the formula is the best way to do that. Now remember, as we look at the proceeds, the 1099-B, this will often be kind of grouped together possibly with a 1099 interest and 1099 dividends, all coming from the same financial institutions or brokerage institutions. And also this will be the summary data oftentimes, and you'll have to get the added actual sales that took place and enter them possibly in separately, the sum of them then adding up to the proceeds that will be on the 1099-B. You want to make sure that that is indeed the case, because this is the form that's going to go to the IRS. The IRS is really looking at that proceeds line. If the proceeds line does not tie up to the detail, then you may get, they may question that. They may very well question that, because that's what they have, the proceeds line for sure. Okay, so that's what we're going to do over here. Now, when you put this information into Excel, if you have a whole lot of stock sales that took place, then you probably don't want to re-enter the entire, stock sales. Obviously, if you had like 100 sales that took place or something like that, even when you entered it into the software over here, then you may want to summarize it, right? And the way you want to summarize it would basically say, hey, these are the stock sales that took place, grouping them together for the long-term sales, and these are the short-term sales, or short-term sales and long-term sales, because those are the determining factors typically in terms of what's going to be the tax impact. Was it short-term or long-term? So if it's a reasonable amount, you're going to want to, in the tax software, just enter all the transactions that took place. If it's unreasonable, possibly you want to summarize the transactions in short-term and long-term transactions, and then attach possibly a schedule to the Schedule C or to the tax return, to the Form 1040, and say, hey, there's the detail. Here's the detail of the actual transactions. When we put this information into Excel, we don't want to do the whole data input again. We want to do the same thing. We're double checking, in essence, the short-term and long-term. So I want to look at the detail from the source document and try to figure out the short-term and long-term portion, group that together in my worksheet so I can pull over. So we're looking basically at the income line, line 1, and I'm going to then support that with the separate schedule, that being my Schedule D worksheet in Excel. Now, we already have this 300 that's in there. That was in there from the 1099 dividend that we had before. There was a distribution that wasn't a distribution in dividends. It was a capital gain distribution, so that's going to have an impact. If you had any carryovers from the prior year that were lost carryovers, that could have an impact as well. So now I'm just going to input my stock sales. So I'm just going to say, all right, we sold stock A. It was long term. So I'm just going to call this stock A, and I got the long term. I'm in the long term portion. I just broke out the worksheet short term and long term down here, and then I'm going to say that the sales price was 1,300 and 5,000. So there we have it, and that's going to give us our loss of the 3,700. It's going to net out against that 300 cap gain distribution from the dividends. Got to make sure to pick that up because that could be a little bit confusing. These kind of things right here, that dividend, that capital gain distribution muddies up the water when you look at your capital gains. If you got a whole lot of sales that took place, that $300 is going to throw you off, and you're going to have to say, oh yeah, that's the capital gain distribution. You want to be able to, just see that. And then we've got the 3,400, but we know that there's going to be a cap at 3,000. So I can't have this go past 3,000 because I can only take 3,000 in losses. So I'm going to say that we're going to have a carryover then that is going to be, looks like 400. So I'm going to put that at the 400. Now, when you go from year to year in terms of your tax worksheet, if you report kind of like your carryovers in some fashion like this, then if someone is kind of doing this separately from the tax return, meaning you want to do this just from the data input, then you can see the carry forward that happened in your prior Excel worksheet and try to put that in separately and deal with that. Obviously, the software, tax software, really helps us with things like capital loss carryovers from year to year. So that means that we're going to have only this 3,000. That's what's going to be now included in the first line item. So I'm going to pull this back on over. I'm going to go back to the tax formula. So now that 3,000 should be included here in that 80,000. 130. Now this gets a little bit confusing because what's included in there that now? Well, we have W2. If I want to double check the W2 wages, here they are. The 50, the 30 adds up to the 80, and I can kind of tie this out to my worksheet as well. So for example, let's do it this way. If I go back on over to the first formula, there's the 80,300. If I go back to my worksheet, I can say, okay, the 1040 going back up top, and this adds up to the 80,130, and that's the 80,130. Let's imagine those things didn't add up, and I'm going to say, okay, now I need to reconcile between the tax return and what I have in Excel just to see which one is right? I'm going to go back on over. Well, I can then check them off. There's the 80,000 for the wages, going back on over here, and say, okay, there's the 80,000. That makes sense. There's the 1380 over here. There's the 1380 there. There's the 1750 here, and here is the 1750 here, and that adds up to the 83,130. Then we also have the capital gains that are included, and so this capital gain line item, that $3,000 loss, is also being included in the tax return here. So if I go back on over, I could say, okay, there's the $3,000 loss. That's also being included, and kind of check them all off. So then if I go back on over, so now we've got no adjustments thus far. We're focusing in on the income, 24,800 standard deduction. We've got the 55,330 for the taxable income. Then I'm going to rely on the tax software to do the actual tax calculation. I won't do that in Excel. You could, but I'm going to rely on the software to do that. So I'm going to go back on over, and noticing when I entered this into Excel, because it's a loss now, then it's going to be reducing. We're getting a benefit at ordinary income rates. I don't have some separate rate kind of thing. Whereas if it was a gain, we could have a separate kind of progressive tax rate system applied to the capital gains. So then I'm going to say that this is going to be the 6088. So I'm going to say, all right, this is 6088. And then this 8,000 I got from my W-2s. That's the payments that we have thus far. So as of now, we're at the 1912. Does that tie out to the tax return? We're at the 1912 here. So that's where we stand at this point in time. And then we'll just continue to enter the data next time.